Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Hello and welcome. Now, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or any related items on these, my charts. This was all my own original work, as I think you deserve to have that. So with that, euro-dollar. A higher yet still indecisive spinning top on Friday, verging on being an indecisive doji cross after the previous session's hammer pattern. We're still back below and within, if only just, the broken upper trend line, which is currently 116.42, of the bright red early July to mid-September descending expanding wedge pattern, as well as below many of the moving averages. Notably, the nearby mauve medium moving average overhead, currently at 116.63. However, we had recently been sliding along the upper trend line, currently at 115.66 of the more recently breached dark blue mid-September to mid-October descending wedge pattern, not expanding. Both of these patterns have been disappointing. In trying any attempt higher, enough that I have retired the potential targets topside, if not the actual patterns themselves. We've also ended up beneath all the moving averages, apart from the long moving average, which is still some distance below. We're also still sitting just on the November 2020 low at 116.02. It very much seems as if the market cannot quite make up its mind on which way it wishes to go. As a result, it has generally headed sideways. However, there is one other feature which I wish to bring to your attention, and something that I have said now repeatedly since about March this year. We are set up with nearly 10 months of this year gone by for a possible annual key reversal pattern here. Thus, if we close on the Wednesday, the 31st of December 2025, either over 110.36 or under 103.53, then we'd be on. Anything in between and we would have a lesser outside year pattern. I'm at this stage not even going to contemplate what the result at the end of the year would be, just that we are set up to achieve one, though right now it looks very much like an annual key reversal up. Now so far today, well, initially nothing much, still capped by that bright red trend line overhead, but seemingly unwilling to try lower and test the November 2020 low at 116.02. It seems the market may be waiting for something to happen. Cable, aka sterling against the US dollar. A lower, possible indecisive spinning top pattern on Friday that was nevertheless still a sixth bearish black crow, and continuing follow on lower from the recent bearish closing black Maribozo. We seem to have formed since early August to mid-October a possible head and shoulders topping pattern. One that has become a little more complicated since last week, as prices try and punch down through not only the bright red neckline of the pattern, which is currently at 133.01, but also the purple neckline of the previous mid-May to late July head and shoulders top, which is nearby currently at 133.33. And that's also as well as the congestion zone below between 132.46 to 132.98. That's quite a lot to go through all told. Now we've managed to punch down through the purple neckline with two consecutive closes below, but only pierced, not closed, pierced under the bright red neckline. Additionally, rising rapidly from below is the gold long moving average support, currently at 132.39. And it all starts seeming formidable. Well, it is actually formidable, but the action since mid-May to date can also be seen as a possible quite large double top pattern. And with all the overhang overhead, it would seem a reasonable force to tackle the supports that are below, however much they may number. I keep a close eye on the gold long moving average as it enters the 132.46 to 132.98 support zone sometime soon this week. Now so far today, a lower open below the bright red neckline, but then moving back up for a while, capped by the purple, seemingly broken neckline, but then punching higher to look like a combined bullish engulfing pattern and bullish opening white Maribozo right now. Just remember that congestion zone below between 132.46 to 132.98. US dollar against the Japanese yen. A sixth bullish white soldier on Friday, following on from the hammer pattern seen 2 Fridays ago. Prices continue their move up and away from the 50% Fibonacci line of the July 23 to July 24 move at 149.61, and also the 50% Fibonacci line for the 2024 move at 150.76, as well as the August 1990 high at 151.58, moving up to just short of the overhead bright red upper bull channel line, which is currently 153.24. For the overall pattern for this very recent move, market move higher, and that is the April 25 today bright red bull channel, which is currently 147.24 to 153.24. In the bigger picture, we're also still within the important, large, shallow and longer term, early July 24 to mid-January 25 bearish shift pitchfork, closer to the dark blue upper time, which is currently at 154.21. Now so far today, a test up to the bright red overhead bull channel line, but so far an immediate rejection back lower from it, though not too far lower, though still enough to look right now like a possible bearish dark cloud cover pattern. US dollar against the CNH, the offshore Chinese yuan. A third consecutive indecisive doji cross pattern on Friday, as the market continues to travel down the attractor of the bright red extension to the lower trend line of the mid-January to late April 2025 descending triangle pattern, which is currently at 712.32. Overhead, we have Fibonacci congestion between 714.48 to 714.95, plus the green short medium moving average, currently at 713.67, and the medium moving average, currently at 715.54, as well as the dark blue neckline, currently at 715.78 of the January to April 2022 reverse head and shoulders bottom. Now this last one has been good at capping prices after being broken on the downside back in late August. Meanwhile below, well, there's not much bar the congestion between 706.32 to 706.57 made up from the 50% Fibonacci line of the October 22 to April 25 move and the June 2023 low respectively. However, the market has until recently seemed shy of testing that far down, stopping in mid-September at 708.45. Now so far today, a strong move, compared to recent times, a strong move lower, down well below the bright red trend line, with what looks like now like a combined bearish opening black Mariboso and bearish engulfing pattern. US dollar against the Brazilian real. A somewhat contradictory pattern on Friday. A bullish thrusting pattern that was also an indecisive spinning top. Now prices dipped down to test the support of the August and July 2024 lows at 537.59 and 536.76 respectively, but also pushed up to test from underneath the green short medium moving average, currently at 539.23, which looked like it might start trying to cap prices. Now further above is the 61.8% Fibonacci line of the October 19 to December 24 move at 541.57. Overall, in the big picture, the market continues within the bright red mid-December 2024 to mid-April 2025. Oh, let me just get that chart sorted out properly so you can see it properly. There you go. Mid-December 24 to mid-April 25 bearish shift pitchfork, sitting a little under the bright red middle time, which is currently at 544.79. We have near to this time two other features. The declining mauve medium moving average, which is currently at 544.62, which has astonishingly traveled down, locked in with the middle time since about June. And the dark blue neckline extension, currently 543.77 of the June to September 2024 head and shoulders continuation pattern. Though I suspect this last one is less of an influence these days. Meanwhile, below the market, we have a couple of 38.2% Fibonacci lines to look out for at 532.15 and 527 even, and the 61.8% Fibonacci line at 524.07, and then not much until the 50% Fibonacci line of the October 19 to December 24 move at 513.82. US dollar against the Mexican peso. An interesting key reversal up on Friday after the previous session's indecisive spinning tops patterns. The market, for the most part, has since about mid-September seemingly been held within a small bull channel, currently 1837.84 to 1871.96. The immediate resistance, which seems best effective on a closing basis, is made up from three parts. Firstly, a lesser Fibonacci line at 1850.81, then the February 2020 low at 1851.71, and finally the flatlining green short medium moving average, currently 1850.62. Further overhead is the rapidly descending mauve medium moving average, currently at 1862.46. Now recently, we had seen prices test down to reach the primary target at 1831.80 for the move down from the recent rectangle pattern formed from the capital market as the congestion between the 50% Fibonacci line in April 24. Actually, I'm not even going to go to it. We're formed down from a recent rectangle pattern. But the secondary target, the harder to reach target, has been retired, as I think its time is now truly up. I should actually add, so far today, nothing much. We're still settled upon, though not yet fully testing, the lower bull channel line.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.